Your millennials and those just behind them that aren't even thinking about buying homes for the next 10 years, they're probably going to be wanting to buy homes right about the time that that older group is selling. And so I think that there could be still some balance, a balance. It's really hard to say and to listen to people that say we're absolutely going to have a crash, in housing values because we're going to have tons of supply. It just doesn't work that way nationwide. The demographics show that it's completely the opposite.
Alrighty, folks, we're going to have a conversation about the silver tsunami, Gen X and baby boomers unlocking all of this inventory that is going to crash the housing market. We're going to talk about new home sales, which actually tanked this morning, significantly below expectations. And we'll talk about multifamily, specifically product being released in the Sun Belt that are really going to dent rent increases, cause higher vacancies as that is churned through. And we have some surprises for the end of the video, but we will hold those for the end. Anna, how you doing?
I'm doing great. Happy Thanksgiving week.
Yes. Happy Thanksgiving week. It is one of those weeks of reflection and all of that. We will touch on what we are both thankful for at the end of the video. But let's get into this silver tsunami. You've been doing some digging. I first heard about the silver tsunami a couple of years ago when it was the reason that basically was going to unlock supply and crash the housing market. It appears that it is another talk track that is going to crash housing in 2025. What'd you find out? What'd you find out about the silver tsunami?
Yeah, I totally disagree with that. For those that are like crash bros and hoping for a big crash in housing prices down the road. Yeah, down the road, not the next couple of years, as people die, if they, don't pass their homes down to their children, then yes, if you have more of one generation that starts to die off, then yes, you're going to have some increasing in supply. But at least for today, we actually have the opposite problem, in my opinion, Michael. And that is that people that own most of the housing in the country are actually locked in and they're not going to sell for anything other than probably death, maybe divorce. Even those that have job changes, most of the inventory is held by people that are by and large retired or already close. And so I found a study, I actually just ran across it this morning before we talked, that was just kind of enhancing that view that you and I've talked about a little bit, that we're going to have supply locked up, not only by the fact that 95% of homeowners have a mortgage rate below 5%. So when you're in the 6 to 7 range, there's really not a lot of incentive for them to move. But I think it's somewhere close to 85% have mortgages below 4%. Yeah. And it was a huge number. I can't remember it off the top of my head this morning, but in the 65 to 70% range, I believe, have mortgage rates below 3%.
It's a big number. Yeah.
We've talked about the fact that if I have a mortgage, my mortgage, Michael, on my home and one of my second homes, they're like 2.3 to 2.6% for 30 years. Why would I sell those properties?
Never.
Not when I can go use a home equity loan and tap equity if I need to and want to, right? There's no reason to get rid of that, because you're then paying for a more expensive home today than what you paid for your home several years ago, and at a higher interest rate. It just doesn't make sense. So I found a study that showed that Gen X and baby boomers account for 70% of the almost 85 million owner-occupied homes. Wow. 70% by Gen X and baby boomers, which is a much larger percentage than those people actually make up of the American public.
Sure.
And they did a study was done by Bank of America that found 70% of homeowners, again, who are about Gen X and baby boomers, that are age 45 to 76 plan to retire in the home they already own or are already retired. So if 70% of US homes are owned by that population and 70% of them are not going to sell until the day they die, that's going to tell you that the vast majority of homeowners are not going to list their property. Yeah. Now, there's exceptions to that, which we can riff and, maybe talk through. I mean, obviously, you've got, as people die, their kids, they might have to go into a nursing home. Mm-hmm. A lot more people, though, are starting to bring in-home care. And especially because most of the wealth is owned by Gen X and baby boomers, They've got equity in their homes. They don't want to give that up to Medicare to be taken care of. Why would they do that when they can do reverse mortgages? They can tap their equity and they can pay for in-home health care for people to come to them. So I think that that's also a shift in our healthcare model, that for this population may see fewer having to sell as they age and need more healthcare. They might just hold on until they die. So that's the first stat that I think we can kind of talk about. But I think the other thing is people are delaying having kids. So even those that are younger that normally, really want to buy a house, many of the younger population are choosing to rent, or they have to rent. They have to rent because it's so much more affordable still, even with increased rents, to rent than it is to buy right now. But many of them don't start buying houses. And we see that the new age for starting homes to buy their first home is now into the mid 30s, where it used to be in the early 20s. And so there's just simply fewer people asking to buy these homes. So there's a little bit of a decrease in demand, but the supply versus the demand is still way in favor of the homeowners, which is why home prices have not really fallen significantly. In fact, they're up about 3.5% today.
Yeah. The silver tsunami is always just not logically made sense to me, because when I think about a tsunami, it just all comes rushing in, right? Hence the word tsunami. And it's not like we're playing a video game where all baby boomers have an expiration date and they're all going to pass on the same day. That's not how it works. Also, we are living longer.
Right.
So again, any kind of, tsunami is going to be delayed medicine. For the longest time, when you got to a certain age, you would trade down. Back to some of your earlier stats, even trading down doesn't make sense for a lot of people, right? Why have a more expensive mortgage in a smaller house? I mean, it doesn't make sense.
And in fact, many are now having their kids move in with them in those larger homes. Or if you're Gen X like I am, I'm 50, I have kids that are, 13 to 21, 22. I said, why in the world would I force and kick you out of the house, right? And it's not that I'm going to baby them and let them live in my basement till they're 30. They know that, right? But I'm like, I'd rather you come back home. I'll probably charge you something for the cost of having you here, at least eating me out of house and home for groceries, right? But if I can put them in a better position until they find something they want to house hack, right? So that the goal is to house hack and kick them out. But why wouldn't I let them come home rather than spend so much money on rent, until they're established or whatever? And a lot of families are doing that. And we're starting to see additions built on, multi-generational additions, ADU units built. We built a home for our mother-in-law on our property. My next door neighbor then did it for his father on their property. So rather than, selling necessarily, they could sell and then move in, but some of them are keeping their parents' homes as rental properties, or putting their kids there and then moving their parents home with them.
Yeah. So, the silver tsunami is not going to be this magical unlock or wave that's going to dwarf. We, of course, are going to have death, divorce, all of that. And I talked with a, top 1% agent, Beth Traverso in King County, Seattle. And she still gets the occasional, boomer selling a home, moving across the country to be close to grandchildren. We'll still have those things, but it's not going to be this wave. It's going to be a trickle. It might be a small stream, but it's not going to be the great unlock. And then the last thing to talk about is a lot of these older homes are not the inventory that the new generation wants. They're dated, right? I know you've bought them. I've bought plenty of quote unquote grandma houses. They're dated. You don't want that. And two, a lot of them are just, functionally obsolescent. Who needs a big McMansion these days with all of those extra costs? So even the stuff that's coming is not the right thing for the market, I don't think.
I disagree with you a little bit, just because of something that same survey said, and I wouldn't have known this if I hadn't happened to look at it this morning. But of those 70% of homes that are owned by Gen X and baby boomers, okay, we had 70% that say they're not going to sell, they're going to stay. So that's a huge number. But it also said that 69% of those owners had already remodeled their home in the last 2 to 3 years to set them up to stay there. So it, putting the money into the home is telling you that they really don't want to sell.
They're staying put. Yeah.
Now here's the thing. Okay. So for today, that means that about 30% of the homes owned by that older generation, when they do sell, are probably dated. But that's a small percentage. Yeah. That's a third. Now, depending on the area of the country that you're living in and the wealth of that generation in that particular area, let's say the medium income or higher, you're probably going to have some areas that for sure have people that couldn't afford to remodel their home. But it looks like, at least from this Bank of America study, that almost 70% have already remodeled. Wow. Now, the question is, how old are they, right? I'm a little in denial that as a Gen Xer, I'm being lumped in with baby boomers, Michael, but I'm only 50, right? I turned 50 just this month, so it's still kind of settling in. But
welcome to the club.
If I wait till I sell my house, till I die to sell my house, then even though I remodeled my house in the last couple of years, I mean, that could be hopefully 30, 40 years plus. By then, my house may be dated, right? Yeah. But if you're a boomer and let's say you're in your 60s to 80s, it still could be 20. Let's just give them the hope that it's 20 years. By then, the house might be a little bit dated, but I think that's the point is we're living a little bit longer. Whether we're healthier or sicker is, a whole nother question, but we're living a little bit longer. So there's not going to be this sudden, like, they're all going to die at 68 years old, like we used to think they did. And so all of a sudden, millions and millions of houses are going to hit the market in the next couple of years. I think it's going to trickle, and there's always going to be some of that provides inventory, but I don't see it being this big wave. And then the other thing is, the younger, the millennial group who are just starting to really buy homes. I mean, if you look at those that are 30 in the mid 30s, that's the average age of a first-time home buyer. Isn't that a millennial?
Yeah,
I mean,
it is.
Tell me the exact age range, but it's basically millennials. So your millennials and those just behind them that aren't even thinking about buying homes for the next 10 years, they're probably going to be wanting to buy homes right about the time that that older group is selling. And so I think that there could be still some balance, a balance. It's really hard to say and to listen to people that say we're absolutely going to have a crash, in housing values because we're going to have tons of supply. It just doesn't work that way nationwide. The demographics show that it's completely the opposite. Now, if you want to talk certain markets, yes, there are certain markets for sure that we have other reasons that we are seeing a big increase in supply, such as vacation rental markets and those hit with high insurance, rates, which we've talked about, which are by and large not owner-occupied homes. They're investor homes that are really starting to hit supply, or they're owner-occupied because of really depressed insurance situations and increases in taxes that people can't afford. So there's always markets where you have a non-normal event that is causing an unlock in supply. And as a buyer and an investor, you want to go into those markets and have a long-term horizon and say, okay, if these values are really down in certain markets or there's a huge inventory, then I'm going to not look at that as a negative. I'm going to go in with a long-term perspective and say, let me buy something while there's this disruption in that supply that's allowing me to get into that with a lower price. And then you hold on for really, for however long it takes for those values to come back up, which history shows us we figure out a way to make that happen.
Yeah. Well, let's switch gears to new home sales. New home sales came out and they were a disaster. I have the numbers here. New home sales came in at 610,000. They were expected to come in at 725,000. Last month, 738,000. That is a massive miss of 115,000. The good news on my channel, a couple of days ago, I told people this is coming. It's going to be a disaster. And it was really easy to figure out because pre-election, I don't know if you went to any open houses. I talked to plenty of agent and investors, and all of them said it was crickets and tumbleweeds 3 weeks before the election. So I don't know why the experts were so off, but they clearly were.
Yeah, I'll be honest with you. I haven't totally dug under the hood, but I started doing a little bit of digging to just
Mhm.
see, just like we talk about GDP and CPI, you can't really make blanket statements like the headline media does unless you dig under the hood to see where is it? What is this, just an elevated overall number, a national number, but what does it really say if you dig under the hood? And one thing that I saw this morning, and correct me if I'm wrong, but I think what I read this morning was that although they're down, the Sun Belt,
Mhm.
especially Georgia, North Carolina, and Florida, it was down 27.8% for new home sales, but the
Yeah.
rest of the nation was actually up
Mm.
8%, Michael.
Yeah.
So let's just, play devil's advocate with
Sure.
the, hey, it's a really bad number, and say, well, if you're in those Sunbelt markets, which tend to boom first and they tend to bust first, any market that booms first tends to kind of bust first. But
Sure.
because of the same things we just talked about with homeowners, where you've got a massive increase in taxes and in property insurance values, property insurance costs, that is making more people say, hey, we need to sell. Then you add these current national disasters and the hurricanes that come through and really devastated those areas.
Mhm.
And you can see why people might have said, hey, we're not going to buy a new house here right now. We need to hold off. And so I think we have to kind of look at the national average
Sure.
with a grain of salt to say, is there something that's skewing that average? So I don't think that number's enough to scare me, I guess is the point.
Oh, no.
Other than to say people still want to buy a house. Yes, let's take this south east section off the table for a
Mhm.
second. But if you look at the rest, people are still buying houses. Now, it's slowing, and home builders are doing other things to incentivize them, paying down their mortgage rates with a couple of points, or they're building smaller homes, which is another trend that, I think we should watch and see what happens.
Yeah. I didn't dig under the covers yet. This number was exactly what I expected. My
Mhm.
question is going to be, um, my guess is this is just demand delayed, not demand destroyed. Right.
Yeah.
Again, when you talk to agents and all of that, and they're telling you 3 weeks pre-election crickets and tumbleweeds, and then you talk to them a week after the election and they're like, oh my God, my phone's blowing up. I'm going to guess that next month's new home sales is a pretty significant snapback. I don't have the
Yes,
details down to the.
consumer sentiment is up. And
Oh
that's,
yeah.
there was clearly a shift in sentiment about optimism about where the country's going.
Yeah.
Whether you're Republican or Democrat, I don't care, but it's obvious
Yep.
to any of us that's like, wow, suddenly the stock market is rallying again. Bitcoin is close to crossing 100,000 if it
Mm.
hasn't already this week, and people are out there shopping for homes again. And so there is this optimism. The question is, does that translate into real transactions, over the coming months? We'll see. I think people are still hoping that interest rates are coming down, but
Mhm.
I think some people that have been looking for a home, Michael, they've been looking for years. I mean,
Yeah.
I've got some younger, nieces and nephews that are in their 30s that
Yep.
that have been looking for a home for like 3 years. First, it was bidding wars. They got outbid on every home they made offers on, and they just couldn't
Yeah.
make, they couldn't get into a house that they wanted. Then they set back, and then they rented, and then their rents went up. And now they're like, I've been sitting on this down payment money for a while. Now they're going, and there's still not a whole lot of options. But if they can go in and get a new home, maybe they do, and they try to get that new home builder to buy down their rates, and then that makes existing home sales not as strong. But the new home builders can still find,
Oh yeah.
those people that are still waiting, and now they're kind of like, well, rates might not go down below 6. 6 isn't too bad in the long term, and they're still moving forward.
Yeah. Consumer sentiment again came out this morning, to your point, and I dug under the covers of that one. And the noticeable uptick was actually just like you said, a noticeable jump in financial expectations for the future. This is
Yes.
part of the survey that asks folks, are you basically optimistic 6 months out? And it was a very noticeable uptick. What I don't know, and I actually talked about it on my daily financial news, is I don't know when the survey was done. Was
Yeah.
the survey done pre or post election? I don't have that data, but regardless, people are feeling better about the future. So again, on new home sales, I actually think in a lot of the country, new home sales are competing with existing home sales. And because builders have figured it out, they can just buy down rates And we're
Yes.
seeing a lot of, to your nieces and nephews, a lot of them are buying new homes. Frankly, Olivia and I bought a new home. We were shopping for a new spot in Vegas. We were looking at existing homes, and we just went to a community, not thinking that, we could get in there, and sure enough, we worried about payment, not price. And we ended up buying a new home because they bought us. This was when rates were 8. We got a rate at sub 5.
Wow.
So, bingo, bango, brand new home. So
Yeah.
builders know what to do.
Absolutely. And to your point earlier, even though those that are keeping their homes have reinvested the money into, 70% of them or so into updating their home and renovating them, what I saw in the markets that I'm in, Michael, and I'm sure this is probably very similar across the country, is because there was such demand that was way outpacing the supply of homes. People were putting completely dated homes. I mean, like they've never been touched for 30 years on the market and getting the same prices as what people were selling 1 and 2 year old homes for. And so the buyers then really slashed their prices, where it was much easier for some people to go in and buy. Our new home developments here completely full. Now that's not the same in every area of the country. There were a lot of build to rent builders who had way too much inventory. And then people bought them and weren't able to get quite the occupancy at the rates they wanted. But in the communities that are by and large for homeowners, the new home developments, I mean, they sold like hotcakes, and there wasn't a substantial premium to get a brand new home for the same price that you could buy a fixer upper. So, I'm sure that that's probably been repeated. I don't know the data on that, but if you look at the stock of home builders and their profits and their earnings, it tells you that, nationwide, they're still doing fairly well, considering all of the, headwinds that they've had to face.
Yeah. I think going into 2025, the longer rates stay at 7% for existing home sales, the stronger new home builders will be. They're not playing the 7% game. They're just not.
Right.
And they're going to win. Well, let's switch gears to, again, the Sun Belt in multifamily. Obviously, we talked to you about multifamily. We talked with Jonathan Twomley about it as well. There is still a lot of inventory, quote unquote, coming online, which is going to cause churn, vacancies, probably some rent softness, maybe some 1-2 month rent specials. There will be a give back, right? Because there's nothing in the pipeline to be built, but probably for the next 6, 18, maybe 24 months, there's a lot of supply still coming in the Sun Belt, right?
There absolutely is. And it couldn't come at kind of a worst time for multifamily operators, right? Because the value of multifamily is in really 2 things. It's one, just like with most investments, you when you look at return versus risk, a lot of people like real estate, and especially multifamily, because there's some kind of income that you're getting every month. And you've got appreciation and upside when you sell. And most multifamily properties are really built by and bought and renovated by investors who really have a short-term time horizon, different than a lot of buy and hold single family investors, right? They're looking for that upside, that quick forced appreciation that allows them to buy, fill them up, raise rents, which raises the values, which then they can sell for a profit. Well, we've already talked a lot about how interest rates have caused the cap rates, or the rate of return demanded by buyers, to go up commensurately. And so that means the values have fallen for commercial real estate, because investors need to buy it cheaper in order to create the same return. But the other side of the valuation of commercial real estate is the income. So basically, the easiest way to explain it is net operating income divided by the rate of return demanded by an investor for that deal equals your value on paper. Well, we've already talked about the cap rate making values fall. Well, if your income falls, that also
double whammy.
It makes your values fall, and it reduces the amount that you get in your pocket every single month. So just like we talked about supply and demand for single family houses for the first part of our show today, you talk about supply and demand of rental units available and how that impacts the rent that you can get for those properties, right? So the more supply, the more options a renter has, the more they can negotiate, and they want a better rent. Well, what happens is when new housing comes online, new multifamily apartments, for example, let's say you have a new 50,000 units in your city, which we're seeing in a lot of these Sunbelt cities. And I invest and operate in these cities, so I know the data is correct. Dallas, Austin, Houston. I'll pick on Texas first because I'm from there and I invest there. We've got, 30, 50, 60,000 new units coming online in 2025 alone. And so what that does differently than maybe some cities, but big cities like Dallas and Houston, it's not uncommon that people drive 45 minutes to an hour to get to work every day.
Mhm.
So they're happy to move out into the suburbs or to move anywhere within that city that's safe and be close enough to jobs, close enough to restaurants and nightlife that are all these little mini cities within a big city. And so if I have an apartment building, it's not like I'm fine and I can demand my rents and I can keep occupancy at 90, 95% as long as no one builds within 5 miles of me. It's anyone that's building within 45 minutes of me, maybe an hour of me. If their rents are much cheaper than mine, that's competing with me. And so in these big cities, you've got people willing to drive a bit, amenities galore everywhere you look, and an increase in 30, 40, 50,000 units and more has a huge impact. And I'll give you just one example of a property that I own today. And we are very actively asset managing that deal and trying to keep occupancy up and trying to force rents. We have multiple new complexes that have come online. And just like builders incentivize people to buy a home, new apartment owners, they're incentivizing people to come rent because they have short-term loans from banks that they have to pay off and they have to fill them quickly. So they don't care about long-term rental income. They don't care about the long-term, whether they had to have write-downs because they're trying to fill it and sell it as quickly as they can. So where we're trying to offer, hey, refer your friend and we'll give you $200 off your first month rent and we'll give them $200 off their $2,000 a month rent. The complex down the street that just opened is saying, hey, we'll waive your deposit, let you have deposit insurance. We'll give you the first month and the last month rent for free. So they're showing a higher rent than I am as a brand new complex, but they're essentially giving them 2 months free and waiving their security deposit. I can't compete with that and still cover my expenses and still pay my investors, my limited partners, their monthly cash flow that they want. And so it really puts pressures on rents, and we have to figure out how to compete, which means we may not be able to give them 2 months rent. We have a bank and investors relying on them, but we can get their rent lower. So it pushes pressure on existing apartments to lower rents as the new builders are doing that. And so what I expect, I'm already seeing it in real time. I mean, I've been seeing it, all of 2024, started in 2023, and I don't think it's going to get a whole lot better in 2025. Everyone hopes these things get filled and then suddenly we have, new supply coming online. But I'll tell you this, an average large city, a major metro, major market sector, generally across the country historically has about a 9 to 10% vacancy rate. So you're about 90% filled all the time, and you should be underwriting your deals to that 90%. But the reality is in oversupplied markets, even though it's short term, it's a struggle to keep them 85, 88% occupied. Wow. The way that we keep them over 90 is we have to offer incentives such as reductions in rent, or we pay for expenses like cable and things like that. And so it's a real issue that's going to continue to put pressure on multifamily specifically, especially in the Sunbelt where all these builders started building in response to the demand and all the new jobs and all the people moving in 2020, 2021, 2022. We're really seeing the peak of that inventory starting to hit now and into next year. So if you're going to hold your properties longer term, you're fine, but it's going to be another year or so. It was survive to 25, right? Hoping for rates to come down. Now it's like, well, hold on to 26 or 27, and then things are going to be positive. So I have a very strong bullish outlook on multifamily over the longer term, especially as it's harder for people to buy homes, which we talked about in the first section. It means there's going to be more of a renter nation, more people are going to want to rent, and they're going to want to rent nice, well amenitized properties near jobs. So over the long term, having apartments is a wonderful place to be. But if you're a passive investor or active, you've got to be ready for the next year or two to continue to be bumpy, both on an operational and an income side, and on a sales side, which sales are down 80 to 90% nationwide of multifamily because of a lot of these dynamics that are going on across the country.
Yeah, Ken McElroy's been doing a wonderful job. I watch Ken all the time, and he's been talking about 25 and 26 being exactly what you're talking about. It's going to be a management intensive, operational intensive year. Probably not a lot of fun, but he does say, hey, 27, 28 is going to be great because there's nothing in the backlog. There's nothing even being proposed or permitted or planned. So yeah, once you chew through this overhang, he's like clear sailing ahead, but the next couple of years are going to be bumpy. I think that's
right, which is huge opportunity for those investors who have the fortitude. I want to say the intestinal fortitude, right, to kind of run into a painful investment at the moment, because it's when you do, if you can get the deals done, it's when you have the best opportunity when there is stress on the seller to go in and negotiate a really great price on a long-term hold. You just have to realize that the days of very quick forced appreciation in and out in 2 to 3 years with a massive expansion in the economy, those days of quick value add are over for a little while. You've really got to shift to a longer term hold mindset. You're going to buy these assets and hold them 4, 5, 6, 7 years. And if you can do that, like Ken McElroy is doing, he's putting the money where his mouth is, then you have the potential to make some really good money on an appreciation front over the longer term.
Yeah, couldn't agree more. Well, let's change gears to what we promised at the beginning, a couple of surprise things here at the end. It is Thanksgiving week. I often find this is a week where we think about what we are thankful for. So Anna, obviously you're thankful for your family, health, all of those standard things. Why don't we give us something that might shock people that you're thankful for?
I'm thankful for challenging times, even though it's not fun when you're in it. Challenging times really force us to have to reevaluate everything, how we do everything, how we're feeling, how, if we want to continue to do what we're doing, if we want to do more, if we want to do less. And so, the last couple of years has been very challenging for me personally, both on, just the operational front and trying to navigate well investments for my investors. There's a lot of pressure when it's not just your own properties, but you've got investors to take care of, and a lot of challenges that we haven't faced before, between pandemic and these changing dynamics in the market. It has forced us to get very, very good and much better than we thought we needed to be, right? There's always things that are challenging, but they help us figure out who we really are, and how we can do hard things. And you think we'd learn that lesson, but each time you're like, oh my goodness, this is a hard I didn't bargain for. Then I fell and I broke my ankle and I couldn't travel and I couldn't do some of the development things I wanted to do. And then credit dried up and banks said no to projects that were a go, and suddenly they didn't make sense. And so, dealing with just a lot of disappointment and feeling like there's so many things outside of my control right now that it's very uncomfortable. Because when an economy is great, you can make some mistakes and the economy still rewards you pretty well if you're average or better, right? But challenging times really have a way, and for me, I'm thankful that they have, to help us reflect on what's important, what's worth our time and our stress level, and what we're really capable of. And so getting through these challenging times and coming into 2025 with some renewed optimism for various different reasons, I'm just really thankful that I've made it through those hard things, happier, healthier, with more confidence, with more joy in the small things that really are not measured by success. But I'm just thankful for resilience and challenges that make us stronger, make us better. If we choose to face them head on, things can always be better. And you've got a lot of things that you can do, even in challenging times, to make tomorrow better than it is today. So I'm just grateful for that renewed realization, and that, I have hope and optimism and joy even through the struggles of the past couple of years.
Yeah, one of the things that I wanted to say in this section was the thanks to you. I mean, you were the first reoccurring guest on One Rental at a Time. Wow, was that like 2018,
It
something like that?
was.
So yeah, I mean, you had the fortitude to we've still never met in person, which I think is
Which is
wild.
crazy.
It's
I've known
crazy.
you for 6 years.
Yeah, exactly. One of my best friends.
Yes, for sure.
Yeah, but again, you took a shot really early on. You committed to an hour a week, and I just wanted to say thank you. You really led me to see that there were people out there, other people that were willing to commit, and your willingness to do that was one of the reasons this channel still exists. Because before you said yes, I was thinking, how do I create single person content, and that's hard and stressful, but working with good people who are go-givers, who have experience, who are really doing it. I mean, again, 2018, you were still working.
Yes.
We saw you retire, right? We've seen you do all of these other amazing things. It's just so much easier to talk to good people and just see what's going on. So I wanted to thank you personally for being the first.
Thank you. That means so much to me, Michael. It really does. I'm so thankful that we met, and that we get to talk to each other every week. It's been a blessing for me as well. I think in this social media world and this world where, there's a lot of negativity and, comments and keyboard warriors and doom and gloom and all this stuff. We're really blessed to live in the age that we do, where we can get to know each other so well and talk every week and make an impact on people that we've never even met face to face. And I can't tell you what a blessing it's been for me as well to be on the show, to get emails from people. Some people have come to me for coaching and consulting. They found me on your show. And for someone to come in and say, like, you've really changed my life and show me what was possible, and been able to help them get their first property or their first, short-term rental, or be, remove the fear from investing long distance and not in their backyard. Like, getting that feedback from people or emails or comments. I read your comments. I don't always have time to comment back on them, but the comments that thank us for really opening their eyes, helping their kids have the courage to buy their first investment property, helping them to think about living below their means, taking that leap to house hack. Like, there's nothing greater, other than obviously like God and my family, right? But there's nothing greater to me than to be able to know that week in and week out, committing an hour a week to people really can change somebody's life, and to see the impact that has. And my hope is that they then teach that next generation, and then they then teach that next generation. It's an incomparable amount of joy that brings to me every day. And knowing, Michael, that you are making an impact. I mean, look at how many people have gone out and bought their first rental property because of you and your show and your books and your commitment. You'll never know. I mean, you see some of it, but you'll never know the seeds that you've planted and the lives that can be changed for generations because you committed to doing this. So I reward you and applaud you, and it's my honor to be on this journey with you.
Yeah, it's so much fun, and I get more of a thrill watching people buy their first property than Olivia and I buying another one. That's kind of where we are, right? Well, let's flip the gear. It is the end of the year. I don't know if you had any great time to think about 2025, but you have any thoughts on what 2025 might be for you?
This is going to shock you, Michael, but honestly, I haven't thought that far yet. And part of the reason is this: my entire life, I've been this like planner, it's in project management. And obviously we created a business. We created 5 businesses, real estate. We bought all these properties. So we always had, okay, here's where I want to be and here's what my goals are. And so now I'm going to level up. And the last couple of years since I retired, I was on the show in 2018, gave my notice, did my first couple hundred units of joint ventures before I started syndicating, retired in May of 2019. It's been 5.5 years since I retired. And in that time, I've continued to grow big business, lots more, wealth and income. But the last couple of years forced me to kind of slow down. And honestly, as much as it was a challenge, I've enjoyed a slower pace of life. And you get to a place, I did this year where I've created the life I wanted to create.
Yeah.
You know, I've created the freedom and have time with my kids and get to travel. And there's a certain point in life where we say, yes, I can do more. I can level up. I can be all that I can be. And I can set big, hairy, audacious goals and I can conquer them. And I've done it and I'll continue to do it. But I'm in a season where I'm really just trying to reflect, grow, focus on my personal health. You know, I've lost a lot of weight this year and have mornings where I can get up late, have my coffee, not talk to anyone, you know, do things that are important to me, spend time with my family without the pressures and responsibilities to add more that really detract from my time freedom and my freedom of low stress in my relationships, right? So like the more I can build, I committed this, and we've talked about it on the show as well, like to not have to work after my kids get home from school. The more I want to build, the more I have found things happen in many startup businesses that require way more time and pressure and stress that I could shut it down at 3, but I'm then in a stress mode that I've got to come down from, where I just want to be fully present after 3. So with that said, I've really been reflecting this year on being more than feeling like I have to keep doing and doing more. Just having joy in the present instead of always thinking about, well, when I do this or this or this next year, then I'm going to have that next level of success. Success is a lot about contentment. And I'm in a place of just trying to focus on me, physical, mental, emotional, spiritual health and my relationships. And so building business, building more has not been at the forefront of my mind for the last couple of months, even though I've bought property and I still look and I still work. Trust me, I've got a lot of investors that are counting on me to continue to do. I'm more in kind of a sustaining mode. And just not forcing myself to have the pressure of what are my big goals for next year.
Well, I think that is a wonderful
things
goal.
Come. And I've never done that my whole life. And I'm blessed to be in a position that I can do that. We've created the freedom and the life that we want. And I've got very little time with my kids home still. I've got 2.5 years left with one child, 4.5 years left with the other. And there's part of me that says, I may not build anything new for the next 2 to 3 years and then be totally refreshed and have new ideas and new insights. Now, if the market does crash, like all the crash bros say, Michael, I'm going to go buy a bunch of property. I'm going to take advantage with the right opportunities when they come in. But right now, I have said no this year to more amazing things and opportunities and partnership opportunities than I've ever said, because I said, you know what? I don't want to grow right now. I want to enjoy what I've built and to be and more. And then the heck yes opportunities when they come, I'm going to jump right in when the time is right. And I'm in a position, a better place to be able to do that. So
there's some wisdom from another gentleman on the show, Dion. He had a saying that really hits. And he basically says, hey, if you've won the game, stop playing. And you've won the game, right? You've gotten to where you want to be. And there's no shame in not playing. You have everything you want. Why have that stress? That's the thing that's wrong with social media is all of these people just keep moving the goalpost. It's always bigger, always more. No, if you've won the game, like Dion, I think he has 18 units. If you have set your life up at 18 units and you won the game, congrats. Go spend 6 months in Thailand. Go to Peru if you want to scuba dive and just you've won. Congratulations. That's okay. Right? Some people win. So congratulations. I love that.
Thank you. And that's the goal. You know, all of us get started either as an entrepreneur or as a real estate investor because you want freedom. But then the world tells you the comparison trap. You have to do more. You have to have more. You have to make more. You have to have a bigger house. All the things we've talked about, which means everybody up levels their cost of living to what they now make. But they also sacrifice their time. And the time freedom is what everybody really wants. Why do they want financial freedom? So they can do what they want, when they want, with whom they want, wherever they want. So if you've got that, why push to compete or compare or do more that's going to take away from that freedom that you've developed? And so we have to get to a place where we run the race, we run it really, really, really hard, and we get to a place where we say, okay, I've done it. Now let me enjoy some of it before I feel the pressure that I have to do more or be more because everyone else says I have to. And I can just tell you from having done it and having that freedom, no deal unless it gives me more freedom and fuels even more income coming in truly more passively, then yes, I'm going to say yes. But creating life by design, Michael, which is what we all challenge people to do, buy the one rental at a time so you can have a little more to make things optional. That freedom is what we want. And so quit feeling like you have to do more and compete nonstop. Learn to be content. Only do things that fuel the life that you want to create by design. And, life has seasons. And so I'm learning that as I'm entering this, halfway season, like fall of my, the fall part of my life. It's like, there's a lot of great things ahead, but I want to enjoy more and challenge myself a little bit less because I have nothing to prove to anyone, including myself, anymore.
I love that. I hope everybody watching this has this restful, peaceful moment sometime in their journey. The race is hard. And again, I tell everybody it takes a decade, but you will finish. Like I just completed my first marathon and it was grueling and hard and painful. But you know what? When you finished, I wasn't going to run another one. I was done. I won the race. I finished. It's the same thing. You don't have to, there's not another marathon to be run after you've finished this one, right?
There might be, but right now you can have time to just to enjoy the fact that you did it and celebrate the success. Congratulations. I'm so proud that you did that.
Yeah, thank you. I was certainly not going to run another one that day. That's right. I'm not going to move the goalpost. Oh, you did one. Let's just keep going and see what happens.
But Michael, you know why so many successful people are so unhappy and they end up, sad, depressed, lose their families, lose their marriages, all those things, because they cannot enjoy what they've done. They constantly feel the pressure that you have to, what's the next thing? What's the next thing? And so if you don't take time to enjoy and celebrate the wins along the way, you're really missing the point. There's so much joy that comes in that celebrating what you've done, looking at it, being thankful for it, right? I'm so thankful for every step along the way. But we need to take time to be grateful and to let ourselves enjoy where we are before we jump to now let's go buy all the stuff we think are going to make us happy. Like sit tight, enjoy Thanksgiving before you go to Black Friday shopping,
Exactly. Well, this has been always fun. Great conversation. Anna, where can people learn more about you?
Well, you can find me at AnnaKellyInvesting.com for information on real estate wealth consulting and coaching, as well as passive investment opportunities for accredited investors when I have them. And you can find me back here every week with you on this show.
Folks, again, if you haven't checked out Anna's playlist, I would actually go to it and go back to the early videos and just watch our evolution. I think it would surprise you and be a lot of fun to do. So Anna, thank you very much. Have a wonderful week and happy Thanksgiving.
Thanks. You too, Michael.